Have you ever wondered how some investors seem to always get ahead in the cryptocurrency world? They seem to know exactly when to buy or sell, turning each opportunity into massive profits. This, my friend, is not a coincidence. It's all about understanding the cycles of Bitcoin. If you're tired of feeling lost when Bitcoin's price goes up or down, then this is the right place for you. In this video, we're diving deep into Bitcoin's 4-year market cycle and showing you how to use it to predict future trends and maximize your profits. Here's the reality. Bitcoin doesn't follow a straight path. Instead, it moves in 4-year cycles, a pattern that repeats over time. Knowing this, you can anticipate when the next bull run is coming or when the market is about to enter a bear phase. This knowledge isn't just valuable, it's essential for anyone looking to navigate Bitcoin trading successfully. Let's break it down. The 4-year cycle is tied to Bitcoin's halving event, which happens every 210,000 blocks mined. During this halving, the reward for mining Bitcoin gets cut in half. Historically, after every halving event, Bitcoin's price tends to rise dramatically. Entering a bull market, this cycle is the key to understanding why Bitcoin behaves the way it does. So, why does this matter to you? By recognizing the timing of Bitcoin's bull and bear cycles, you can position yourself to buy low and sell high, maximizing your profits and avoiding major losses during market downturns. But this strategy isn't just about timing the market, it's about having the right tools and mindset to capitalize on the right moments. But how exactly do you make use of the Bitcoin cycles? Well, in this video, we'll walk you through it step by step, breaking down the technical aspects of the cycles and showing you how to apply this knowledge to your investment strategy. By the end of this video, you'll have the insights and strategies that many successful Bitcoin investors have been using for years. So, stay tuned because what you'll learn today could change the way you approach Bitcoin forever. Now that you understand the importance of Bitcoin's 4-year cycle, let's dive into the technical analysis that makes this cycle so powerful. Many investors might feel overwhelmed by the market's volatility, unsure when to enter or exit. This confusion often leads to missed opportunities, or worse, significant losses. But the key is knowing how to read the cycles, how to align your investments with the market trends, rather than fighting against them. The 4-year cycle is more than just a pattern of price fluctuations. It's influenced by key events like Bitcoin halving, which creates supply shocks that can drive prices higher. However, it's important to understand that while halving events are predictable, market psychology can introduce volatility, which means you need to be prepared for sudden shifts. This is where technical analysis comes into play. By learning how to interpret the market's movements and patterns, you can predict price movements more accurately, giving you a distinct advantage in the market. So, how do you use technical analysis in conjunction with the Bitcoin cycle? First, you need to study key indicators such as moving averages, RSI relative strength index, and support, resistance levels. These tools help you understand the current momentum of the market and give you a clear idea of when to buy or sell. When combined with the knowledge of the 4-year cycle, these indicators can become incredibly powerful tools for maximizing your investments. For example, during a bull market phase, we often see the RSI reaching overbought levels, signaling that a correction could be on the horizon. Similarly, support and resistance levels will help you identify entry and exit points. These strategies aren't just about making educated guesses. They're about making informed decisions based on proven technical principles. But here's the secret. Most traders don't use these tools effectively because they're too focused on the daily fluctuations, missing the bigger picture of the 4-year cycle. But with the strategies we're teaching here, you can avoid this mistake and set yourself up for long-term success. So, stay tuned as we continue to uncover more ways to align your investments with Bitcoin's cycles. In the previous chapters, we covered the power of understanding Bitcoin's 4-year cycle and how to use technical analysis to capitalize on its fluctuations. But now, let's take things to the next level by exploring market psychology and how it plays a crucial role in Bitcoin's long-term success. This is where many investors falter. They don't understand the psychological drivers that influence price movements. This lack of insight can lead to poor decision-making during times of volatility, often resulting in missed opportunities or financial loss. Market psychology can be a driving force that either accelerates or hinders Bitcoin's price movement. Consider how fear and greed influence the market. During a bull run, emotions such as greed can drive prices higher than fundamentals would suggest, leading to a bubble. Conversely, fear during a market crash can cause prices to plummet, even when Bitcoin's fundamental value is still strong. Understanding the emotional side of the market allows you to keep a cool head and avoid making rash decisions based on panic or FOMO, fear of missing out. What's fascinating is that these psychological patterns align perfectly with the 4-year cycle. During certain phases, investor sentiment can swing dramatically, impacting market trends. For instance, during the post-halving phase, there is often a surge of optimism, which leads to a sharp increase in buying pressure. Understanding how sentiment shifts during the cycle can help you predict the direction of the market, enabling you to make smarter, more calculated investments. Moreover, the cycle of accumulation is vital to understand. This is the phase when savvy investors begin to buy Bitcoin quietly, before the next bullish surge. They are taking advantage of low prices, knowing that when the market becomes more bullish, they'll be able to sell at a significant profit. Recognizing this phase and buying in when the market is in a state of accumulation can significantly improve your long-term gains. As we wrap up this chapter, remember that the key to success is not just understanding the technical indicators or the 4-year cycle. It's about understanding the psychological forces at play and how they interact with the market. By combining the psychological insight with your technical analysis, you'll be positioned to make smarter, more informed decisions in the market. But there's even more to uncover about how to master the market cycle and consistently profit from it. Stay with us as we continue to reveal the secrets of Bitcoin's 4-year cycle. Imagine this: the market has just peaked, and the price of Bitcoin is now in a steep decline. For many, panic sets in. The rapid rise of Bitcoin's value was thrilling, but now it's time for the inevitable correction. You might be feeling the pressure as the value drops, but let's take a step back and assess the situation objectively. If you've done your homework and studied the market cycles, you know that corrections are simply part of the process, and they can be a golden opportunity for those prepared to act strategically. The correction phase is when the market recalibrates itself, typically following a major surge. This phase can be brutal for short-term traders who are caught up in the hype and sell in fear, but it can also provide opportunities for long-term holders who understand the cycles. Bob Loukas and other experts highlight that corrections are not something to fear. They're a natural part of any market cycle. History has shown us that after every major drop, Bitcoin has consistently bounced back stronger, higher than before. The key is to have patience and a plan. Many seasoned investors use the correction phase to buy more Bitcoin at lower prices. But how do you determine the right time to enter? One critical strategy is to monitor key technical indicators, such as the Relative Strength Index or SI or moving averages, to assess whether the asset is oversold and due for a rebound. Another important factor to consider is market sentiment. When fear dominates and headlines are filled with negativity, it often signals that the market may be nearing its bottom. But let's be clear, it's not about buying recklessly. The correction phase requires precision. Only those who truly understand Bitcoin's cycles can time their investments effectively. During these drops, remember, every dip brings the potential for future gains if you know when and how to act. As we move forward, we'll explore the best ways to manage risk during this phase and how to leverage it to maximize your returns. Stay tuned as we uncover the next critical phase in the Bitcoin cycle, the accumulation period, and how you can prepare yourself for long-term wealth. Now that we've weathered the correction phase, it's time to talk about the accumulation period, arguably one of the most exciting phases in the Bitcoin cycle. Picture this: after the market drops significantly and the panic has subsided, a quiet but powerful opportunity presents itself. This is when seasoned investors start accumulating Bitcoin at discounted prices, knowing that the next rally is inevitable. But here's the catch: the accumulation period doesn't look like the excitement of the bull run. Instead, it's a time of patient waiting, strategic moves, and calculated risk-taking. This phase might be hard to recognize for the untrained eye. Prices have leveled out or even dropped further, and the media might continue to hype negative stories. But here's the truth: accumulation is happening under the surface. Smart investors are scooping up as much Bitcoin as they can, anticipating that the market is poised for the next surge. Bob Loukas points out that understanding the market cycles means recognizing when sentiment is wrong. When everyone's selling, it's actually the best time to be buying. The real challenge is having the patience to wait for the market to correct itself and build momentum for the next leg up. During this period, the key to success is consistency and discipline. Setting a clear strategy for how much Bitcoin to accumulate and when to make purchases is crucial. For many investors, a strategy known as dollar cost averaging (DCA) comes into play. DCA involves consistently buying Bitcoin at regular intervals, regardless of the price. This helps smooth out the volatility and prevents you from trying to time the market perfectly, which is nearly impossible. But how do you know when the accumulation phase is ending and the next bullish phase is beginning? The answer lies in observing the market sentiment once again. As Bitcoin starts to gain some traction and prices start creeping up, the market shifts from fear to hope. then to optimism. The market's mood will start to change. And when you see more people getting excited about Bitcoin again, you'll know it's time to prepare for the next bull run. But always remember staying ahead of the curve. And being prepared will ensure that you can capitalize on the opportunities when they arise. In the next chapter, we'll discuss how to position yourself for maximum profit during the next bullish rally. Buckle up, because the next stage could change your financial future forever. As we shift gears into the bullish rally, the excitement begins to build, and the momentum picks up. You've made it through the most volatile parts of the cycle. Now it's time to reap the rewards. But before you get carried away with the wave of optimism that's sweeping the market, there are a few key strategies you must implement to maximize your profits. When Bitcoin enters the bullish phase, it often feels like a rocket has launched. Prices surge rapidly, catching the attention of investors and media alike. But remember, the goal here isn't to be swept up by the hype. It's to stay strategic. During these moments, timing is everything. The key is knowing when to sell and lock in profits, while avoiding the temptation to hold on for just a little longer, hoping for a higher price. Many investors, especially beginners, fall into the trap of greed at this stage, only to watch the market turn around and take back the gains they've made. Bob Loukas often emphasizes the importance of exit strategies. Before entering a bull market, define your price targets and set stop-loss orders to protect your investment. It's essential to have a clear plan for both entering and exiting the market. A good strategy includes taking profits along the way, especially as the price surges to new highs. If you wait too long, you might end up in a situation where the market reverses, leaving you scrambling to make decisions under pressure. Staying disciplined is the best way to ensure you capitalize on the upswing without getting caught off guard. Another strategy that can work well during the bullish phase is to keep a portion of your Bitcoin in reserve instead of selling everything at once. This allows you to capitalize on any further price increases, while also protecting yourself from a sudden market correction. You want to be in a position where you're benefiting from the rally, but also prepared for the inevitable cooling off period that always follows. The end of the bull market is just as important as the start. While everyone else is celebrating their massive gains, remember that it's the well-prepared investor who knows when to exit and lock in their profits. Don't let FOMO, fear of missing out, dictate your decisions. Stick to your strategy, and you'll be able to walk away with substantial profits. In the next chapter, we'll discuss how to prepare for the bear market that inevitably follows after a rally, and how to safeguard your wealth during the downturn. Stay with us, because understanding how to manage your portfolio during a bear market is the key to long-term success. As we move into the bear market, it's easy to get discouraged. Prices fall, media outlets talk about the doom and gloom of Bitcoin's future, and many investors feel the pressure to sell everything and cut their losses. But bear markets don't need to be a time of fear. They can actually be some of the most profitable moments for those who understand the cycle. Bob Loukas, a seasoned trader, has always emphasized the importance of seeing bear markets as opportunities. While it may feel uncomfortable, this is the time to accumulate and position yourself for the next rally. During the bear market, the price of Bitcoin often reaches levels that weren't available during the bull run, creating a window for smart investors to buy at a discounted price. However, it's not just about blindly buying. The goal is to look at long-term trends and fundamentals to guide your decisions. One of the most important factors during a bear market is to protect your capital. Many investors make the mistake of holding onto assets in a bear market simply out of sentiment. However, Bitcoin can lose significant value in a short period, and the last thing you want is to get caught in a position where your capital is locked in a downtrend. This is why using stop-loss orders and other protective measures is crucial for preserving your portfolio. A bear market is also the perfect time to focus on education and strategy. Use this period to enhance your trading skills. Learn more about Bitcoin's technical and fundamental analysis, and study past market cycles. By the time the next bullish trend starts, you'll be better prepared to take advantage of it. Remember, the bear market doesn't last forever. When the market turns around, those who were able to accumulate during the downturn will be the ones who see the greatest returns. In the next chapter, we'll dive deeper into how to prepare mentally and financially for future cycles, and how to make sure that you never miss an opportunity again. Stick around, because understanding the psychology of the market is just as important as understanding its technicals. Understanding the psychological aspect of trading and investing is just as important as mastering the technical charts. A crucial part of success in Bitcoin investing lies not just in market analysis, but in controlling your emotions. Emotional reactions like fear, greed, and impatience can easily distort decision-making and lead to losses, especially when faced with market volatility. Psychology plays a pivotal role when navigating the inevitable ups and downs of Bitcoin. During the bullish phase, the euphoria can make you overestimate your capacity, causing you to make risky moves that might backfire when the market eventually corrects. On the flip side, during a bear market, fear often dominates, leading to panic selling and missed opportunities. The key to success is discipline, having a solid strategy, sticking to it, and staying calm under pressure. When Bitcoin's price drops significantly, many people panic and start selling their positions, convinced that the market will continue to fall. But what they don't realize is that these sharp declines can create massive opportunities for those who can stay cool-headed and strategic, knowing when to step back, reassess, and wait for the market to show signs of recovery is critical. Many of the wealthiest traders didn't make their fortunes by jumping on every price move. They mastered the art of waiting for the right time. It's also important to remember that the psychology of the market is not entirely driven by fundamentals and price action. Bitcoin, like all assets, is influenced by market sentiment, the collective emotions of investors. Understanding this sentiment and being aware of major news events, regulatory decisions, and technological advancements that could sway the market can help you make more informed decisions. Being prepared mentally and emotionally for such shifts will ensure that you're never caught off guard. In the next chapter, we'll explore how to handle market volatility and specific strategies for maximizing your profits, even in times of uncertainty. Get ready, because understanding the power of strategic thinking and emotional control will unlock the next level of your success. Let's face it, volatility is part of the DNA of Bitcoin. The market can swing drastically, moving from euphoric highs to terrifying lows in a matter of hours. But while most traders panic in such moments, the successful ones have learned to ride the waves with a strategy that works for them, regardless of the market's temper. Understanding volatility starts with acceptance. If you want to invest in Bitcoin, you must be prepared for these emotional roller coasters. The key here isn't to fear the volatility, but to leverage it. While a sudden price dip might have the masses selling off, you can seize this as a buying opportunity. With a carefully planned strategy, these market shifts can turn into powerful profit-making moments. One strategy that many successful traders swear by is called dollar cost averaging (DCA). This is a simple yet effective method. Invest a fixed amount in Bitcoin at regular intervals, regardless of its price. This strategy works exceptionally well in volatile markets, smoothing out the impact of price fluctuations. By sticking to this routine, you reduce the risk of investing too much at the wrong time and increase the chance of buying during dips. Over time, this strategy averages your cost and can significantly increase your chances of long-term success. But volatility isn't just an external force, it's also tied to your behavior. The first step in managing volatility is mastering yourself. You have to avoid impulsive decisions that stem from emotional reactions. So, when the market dips, instead of making quick moves based on fear, remind yourself of the bigger picture. Stay grounded in your strategy and your long-term goals. In the final chapter, we'll dive into advanced strategies to maximize your returns during Bitcoin's market swings. Trust me, you won't want to miss it. You've got this far. Now let's go the distance. You've now navigated through Bitcoin's 4-year cycle, embraced the volatility, and learned how to approach market cycles with patience and strategic thinking. But what about advanced strategies, those that can catapult your Bitcoin investments to new heights? This is where you really start to differentiate yourself from the average trader. Positioning yourself at the forefront of Bitcoin's next major move requires more than just understanding the trends. It requires mastery over advanced risk management, leveraging tools that have made multimillionaires out of everyday investors. One such tool, the futures market. Bitcoin futures allow you to buy or sell a Bitcoin contract for a future date. So are the potential rewards, and analysis. Futures trading can offer massive gains if timed right, but just like any advanced strategy, it's a double-edged sword. The risks are high, but so are the potential rewards. So, how do you take advantage of this? It all boils down to timing and analysis. Successful traders use sophisticated charting tools, such as candlestick patterns and technical indicators, to predict future price movements. This isn't about gambling. It's about using data and historical trends to make well-informed decisions. For instance, some investors swear by the RSI Relative Strength Index, a popular momentum oscillator, to pinpoint overbought or oversold conditions, helping them determine the best times to enter or exit the market. Of course, you don't have to use every advanced tool at once. Many successful investors start small, testing a few strategies and building their portfolio over time. The key to this phase is continuous learning and adaptation. By immersing yourself in the Bitcoin ecosystem, analyzing trends, and practicing with smaller investments, you could eventually scale up your strategy to achieve larger profits. You've made it through the technical side of things. Now, it's time to truly embrace your journey and take your Bitcoin investments to the next level. But here's the catch: timing is everything. The market is always shifting, and only the most adaptable traders will succeed in the long run. So, as you head toward your next steps, always remember, in the world of Bitcoin, staying ahead of the curve is not just an option, it's the only way to thrive.